Well, millions of people in the state of Florida are facing foreclosures or short sales or other financial issues. But there is help out there if you know where to look. But would you turn to a guy who's only 20 and has been doing financial counseling since he was a teenager? Danny Singh is a local guy who took control of his family's finances, and he's now helped others get out of debt and even save their homes. He has a couple of books out, too, where you can turn to for help. There's one of them right there. It's called Finance 101. It is the Whiz Kids Perfect Credit Guide, and Danny joins us once again on Good Day to talk about his latest venture. Danny, good to see you, man. Appreciate you coming in. I mean, you're getting a lot of attention. You even have some big politicians, Governor Rick Perry, writing something in your book about this. How did you be in a position at age 11 to take over the family finances? How did this work?
My mom trusted me with her credit cards, and from there I learned everything. I taught myself everything by reading stuff on the internet, talking to customer service agents on the phone, and I learned the concepts of credit and how without credit you cannot get anything in this world, and now I understand why it's a very big business tool.
But most people at age 11, what is that? It would be 5th or 6th grade at that point, right?
Yes.
Maybe 7th grade. They don't care about this kind of stuff. What was it about you where you truly cared about this to take this as a career path?
When I was 11, at first I wasn't sure I was going to take this as a career path. I decided during my years in college because I really loved business. When I was 11, I used the credit card to buy Slurpees at the gas station and junk food and stuff like that. But later I started really understanding that if you don't pay it, then it looks really bad on your background. 60% of employers now check credit. It's helped me understand why we're in such a bad economic position. And I really want to help people achieve their dreams of financial victory, just as I've helped my mom.
You're going to Seminole State right now and also UCF at this point. You're a bit of a financial guru, according to some people. Is it tough for people to listen to you because you've been a teenager, you're now 20, but you had people coming to you as a teenager saying, hey, help me save my homes. How did that work out?
Some people put themselves into such a bad position because of scams out there that I couldn't even help them, but there were some situations that I was successful in helping them. If you're in a position where you cannot pay your home, go to makemyhomeaffordable.gov and only go to that website. It's run by the Obama administration. They have programs that can help you lower your monthly payment and do other things. Many of the people that have come to me for help have done what's called a loan modification, which is very dangerous. A loan modification is, say if your mortgage payment is $500 a month and you reduce it by $300 and now it's $200 every month. The $300, it's not erased. It's accumulating more with interest, and it's also accumulating interest off of interest. And at some point in time, if the loan modification is a trial loan modification, then the bank is going to want a massive amount of money from you. And if you don't pay it, they will repossess your house.
Biggest mistake? I mean, you're a 20-year-old guy looking at what 40 and 50-year-olds are doing. What's the biggest mistake adults are making right now when it comes to finances?
The biggest mistake I see is I think they're taking a lot of abusive loans out there, and I really want the government to do something about this. There are loans called payday loans. They range from 36% all the way up to 800%. There's no cap on the interest rate. And many adults are turning to those loans because they have bad credit, because they've abused credit cards. I want to encourage everyone to avoid those payday loans. You see them especially on the internet. You cannot deduct any of the interest off your taxes. A payday loan is, let's say if you have a bill due on Friday, but you have no money in your bank account. So Thursday you would go to the payday loan provider, you would give them a check, and on Friday they would try cashing the check with all the interest.
Wow. So put you way behind at that point. Okay, the books are out there. Where can you get the books, by the way? Got a couple of them. Finance 101, the Whiz Kids Perfect Credit Guide. Where do you get these?
On Amazon and Barnes & Nobles.
Okay, they have them out there right now. Even gave us a shout out on the cover of the other book, so appreciate that. Danny, lots of good stuff in here. You're helping a lot of people. I do appreciate it. Best of luck to you.
Thank you so much.
All right.
A North Texas teenager is heading to Florida for college. Growing up, he wanted to be a doctor, but that's all changed the moment his mom gave him a new chore around the house, one that saved her thousands of dollars and helped her son find a new path in life.
The lower your rate used to be 17.99 variable, and now it's only 11.99. That's a big difference.
He looks and sounds like a financial planner.
The interest rate on this one used to be 13.24, or now it's only 10.24. No annual fee.
But he's not. This is a mother and son crunching numbers, just as they've done for 8 years, since Danny was 11 years old.
I noticed that when he was 10, He was very into finances, and every time I paid bills, and he would come and watch me.
When Mom Rita started getting behind on finances, her then little boy took notice.
And Danny said, "Mom, why don't you let me take care of this?" I looked at him, I'm like, no way I'm gonna give it to you.
But she did, starting small and under close supervision.
When she started working longer hours at her jobs, I was asked to just open the mail and pay the bills, log in, and just make sure nothing is delinquent.
Very shocked. For 11 years old to handle my finances, it's not unheard of.
Danny did more than pay the bills. He started monitoring her IRA, removing annual fees from credit cards. He even refinanced the house at 14.
My goal is to help her pay off her mortgage. I personally like paying above the minimum payment on that.
Danny's achievements even caught the attention of Governor Rick Perry, who honored him with this proclamation.
This is 3.99 for life.
And while Danny says math is important for finance, there are two more essential parts to that equation.
They require just attention and a lot of responsibility.
I gave him a chance. He did a wonderful job.
And now he's off to college to take his role of financial planner from a personal to a professional level. So Danny is attending the University of Central Florida. He still plans to manage his mom's account from there.
That's what Tom's saying, because she watches online.
She's going to end up going to UCF. She's not going to go back to college.
Yeah, she might just stay here. Oh, yeah, she's already talking about that, so we'll see what happens.
Awesome.
All right, mom and dads know it can be downright hard just getting the kids to do their homework. But one young man took it a step further. He took over the family finances at 13 years old. How he's made a big difference in the past 5 years. But first,
Making a Difference is sponsored by Chick-fil-A.
well, most of us dread paying bills, 401ks, taxes. It can be mind-boggling at times. But one young man is making a difference, earning his mom a perfect credit score. Danny Singh has an eye for finance. 7 years ago, at age 11, he took over his mother's daily bills. And I do mean took over.
I manage all her credit cards. I make sure they're always paid early, paid on time, never delinquent. I make sure her home insurance is paid, her car loan is paid, her car insurance is paid. I make sure her taxes are getting paid properly, the escrows with the mortgage. I make sure while numerous payments are being submitted every day to keep her utilization below 30%.
Okay, I get it. You're smarter than me and ahead of the curve for most 18-year-olds. But it did take hard work for this whiz kid to learn his craft, using the internet, talking to customer service centers, advice from his mom, and reading the fine print.
It used to be kind of hard and annoying, but then gradually I started liking it and it started becoming my passion. And so now I really like finances and want to do that in college.
Danny got into crunching numbers when his mom was working longer hours and she didn't have time to stay on top of the family bills. Now, there's time for everything.
I'm able to spend the day with her, and she really likes spending time with me and not having to deal with the stress. And she's really happy, since my father passed away, that she has a person she can share it with, and it's made us closer.
Yeah, that's one smart little guy right there. Danny says he's going to stay close to home when he goes to college. His advice, don't be late paying utility bills. They're exactly like a credit card score. And just, you can be late on those credit card scores, and not a good thing. He says, make sure if you get that utility bill, pay everything on time. That's important. His mom, by the way, has a credit score of over 800.
God bless him. He made it work.
That's it. We'll see you at 11.
It's 10 o'clock. Now, Fox 35 News at 10.
But after the fire trucks left, flames broke out again.
You have certain guidelines, and you have to make sure you're meeting them or either exceeding them.
And just 18 years old, but this local teen helped his mom refinance their mortgage. He'll tell us how he did it. Coming up and give you a tip or two after the break. On Monday.
More signs tonight that the housing market will still get worse before it gets better. The number of foreclosed homes on or about to hit Metro Orlando's resale market has more than doubled in just the past year. Now here's our news by the numbers. California-based Realty Track says the four-county Orlando metro area had 13,712 bank-owned properties in January. Now that's up from 5,874 a year earlier. And all these foreclosures, well, you know what they're doing. They're driving down the price of other homes on the market, making it a tough time to sell or even refinance your mortgage. We've done story after story about many of you who have come to us for help because you can't get your home refinanced, can't get a loan mod with a lower interest rate, and basically can't even find a way to keep your home. Now, we know in many of those cases the system failed you, but tonight we have a success story that may, if not give you hope, make you smile a little bit. This is why, joining us right now, 18-year-old Danny Singh. Years ago, when he was only 14, he managed to refinance his mother's home, got it down to 4.85. Danny, thanks for coming in.
Thank you.
All right, so the first and most obvious question tonight, how did you become such a whiz kid, numbers cruncher at the age of 14?
I started handling my mother's finances when I was 11. I started with their credit cards, but then I started wanting to know about other financial aspects, and so I grew into the mortgage.
Do you get above average grades in school, or what's the deal here? I mean, because 14 years old, giving your mom direction, that's pretty much unheard of.
While doing the finances have actually improved upon my academic skills, so they've actually contributed to me getting better grades in school.
All right, but again, you just liked it? You just wanted to do it? One day you said, Mom, hey, let me do it?
No, actually, she started having to work longer hours, and so she asked me to make sure the bills were not getting late, to just open the mail and just pay them.
All right, and you did it.
Yeah, I did.
All right, let's talk a little bit about this refinancing. What was the interest rate on your mom's home before you refinanced?
It was at 5.8.
Okay, and you got it down to 4.85. So when you began the process of getting that refinance, obviously your mom had to represent by signing everything, but what did you do?
I talked to Bank of America. I told they looked at her credit report. They made sure her scores were above 700. I was actually quite proud of myself for that.
You should be. Did you run into any difficulties at that time with the bank?
Well, they still didn't want. I couldn't get it originally at 4.86. They were approving her for 5.2, but then I suggested paying points, which is paying interest up front, because we were planning on living in Orlando, Florida forever. It's beautiful here, and all our family's here. And so I was able to negotiate with them over the phone to lower it to 4.86. They were very pleased with the performance on the credit cards, and considering we also have our credit cards with Bank of America.
So it all worked out for you. Was it tough?
Yeah, it was, because they asked for her income. They compared her income to her credit card debt to calculate the debt to income ratio.
Did you have to persuade him?
Yes, I did have to persuade them. It wasn't easy, because they have certain guidelines, and you have to make sure you're meeting them or either exceeding them.
All right, so the bottom line, the lesson for everyone to learn here tonight is be persistent. You were, and it worked.
Yes, be persistent, don't give up, be confident in yourself and your credit.
All right. Thank you very much, sir. We appreciate your time. Good information.
Thank you.
We all feel smarter already. Thanks, guys. New tonight, serious concerns about stormy weather where you live.
All the time. You're watching News 13 with Yvette Bruce-Wall and meteorologist Dave Cacciarella. This is News 13 Primetime.
Good evening, everybody. Thanks so much for joining us on this Friday night. We're live at 10 o'clock. I'm Yvette Bruce-Wall. Here are the big stories. Plus, filing taxes to fixing credit scores. We'll introduce you to a guy who's been taking care of his family's finances since he was just 11 years old. Paying the bills, balancing the checkbook, all the tasking responsibilities of being an adult, right? But one mom says, you know what? She just handed it all over to her young son. News 13's Amanda Evans is joining us live in the newsroom. Amanda, an 11-year-old banker?
Yeah, that is when Danny Singh started taking over all of his family's finances. His mom wrote us this email saying he has never been late on a bill in 7 years and has fixed her credit problems. So we had to meet him.
With slicked back hair and a jet black suit, Danny Singh looks like any other finance advisor. Laptop in tow and 7 years of experience under his belt. The only thing is, he's just 18 years old.
It's a matter of responsibility. As long as you're paying your bills on time, then the banks will work with you.
It's a responsibility he took on at 11 to help his mom out.
She started working longer hours, and so she told me to open the mail and make sure the bills weren't getting late.
But he did much more. He took over the family's finances.
I do it differently than most adults. I actually pay every day to keep her utilization level on the credit cards below 30% because that's where lenders want to see it.
He's helped get his mom a perfect credit score and calls the credit card companies once a week to try and get the interest rates down. And it's worked.
One credit card she had at a rate of 18%, and I talked to the corporate office and they cut it down to 9.9%.
With his power tie and powerful attitude, this is one young man that's got it together.
You have to know your spending limits. Don't spend more than what you can't afford.
Wise advice from this Whiz kid, taking his passion for money all the way to the bank.
Danny Singh is a senior in high school now and is planning for college. When he's not budgeting the checkbook, he's been busy writing essays for college scholarships. With one goal in mind, no big surprise, he wants to study finance.
I'm sure his mom is very proud. News 13's Amanda Evans reporting live for us tonight in our newsroom.
It's 8 a.m. from Fox 35. This is Good Day.
Yep. It's just bizarre. All right, are you worried about your finances? What if a college student could have the answers that you need?
Yeah, coming up here on Good Day, we're going to introduce you to a young man, Danny Singh, the financial whiz kid, how he's helped his family and how he can help you, too. There he is.
This morning, teachers... Good point.
College students finishing school these days with a record amount of debt, but it's not just the students. Their parents are also swimming in debt these days. So sometimes parents might just need to listen to their kids to get on the right financial path. Danny Singh is the teenager known as the financial whiz kid. Now get this, you see these signs up everywhere. So at the age of 11, he took control of the family finances. At 14, started negotiating with the family's mortgage companies and the banks, asking for refunds and lower rates. And today he's speaking at Seminole State College. But first, he's talking on Good Day. He joins me here to talk about it. Danny, good to see you, man. Thanks for coming in.
Thank you.
All right, how old are you now, by the way?
19.
You're 19, and you're already a financial guru. Let's go back to square one. Why did you decide to get involved in the family finances at age 11? Because most kids don't have any idea what's going on.
It was really unexpected. She just gave me her credit cards, and she was working longer hours at work, and so she was just asking me to make sure the bills weren't getting late. My mom is obsessive compulsive about that. And so I started just opening the mail as she wanted. She started adding me to all her accounts and giving me full authority. And so I started becoming unknowingly very interested in it. Originally, I thought I was going to be a doctor, but that changed. And then it was very exciting to me to get interest rates down and fees refunded.
So how did you think to call the companies and say, hey, I think this rate might be a little bit too high, and by the way, give me a refund, because you got, what, $1,300 in refunds for your family, right?
Yes.
How'd you think to do that?
My mom just told me that if you ever have a issue, call customer service center, as everyone should do. I didn't think I could do that in the beginning, but I said, hey, we should try it. And so that's when I initiated that. And so whenever there's an issue, I always call them or send them a letter or just any kind of contact to get the issue resolved for her.
I'm amazed at what you've done, and now, of course, you're in college, and so I would imagine student loan debt is a big issue for you now, too. What do you tell college students about college student loan debt?
If you have student loan debt, don't look at it with fear. Look at it with honor, because not everyone can get credit. If you treat your student loan right, it can become your best friend. If you do really well on student loans, you'll have little or no trouble getting a house, getting a credit card, getting just anything, because you need to have credit to get anything in this world. The best way to handle your student loan, unless there's an extra fee being charged, pay your student loan, the minimum payment, with a credit card, and then pay your credit card off immediately, because the rewards program does save money. But if there's a fee for doing that, then don't do it. Also, be careful how many times you defer the payment, because when you defer the payment too many times, then the interest starts compounding and your loan amount can eventually double.
Yeah. Amy, I wish I'd have met this guy, what, 20 years ago, right? Thanks. Yeah, so you're going to be talking to college students. What other financial issues are college students talking about these days? Because I'm sure it also applies to their parents in many cases.
Well, many students ask me why they need a credit card, why not just invest the money? And to answer that, you need to have a credit card, because companies will not give you their services, such as a house, car, electricity, anything, without knowing that you will not cheat them. There's no way to tell that you're just not going to use the water for 1 month and not pay the bill when you get it. Then they're having a financial loss, and they're trying to avoid that. So I'm going to emphasize that. I'm also going to emphasize that bankruptcy and debt settlements need to be avoided. That's what I feel is ruining the economy. If you have a lot of debt, again, don't look at it with fear, look at it with honor. You need to pay it off. Just as if your professor gives you a lot of homework, you're just not going to do it. You're going to do it to the best of your abilities.
And you're 19. My gosh, you got a lot of wisdom early on, so I assume you're going to now go on into the finance field, right?
Yes.
All right, so you're going to stay at Seminole and then off to an Ivy League, I would imagine, huh?
Hopefully, yes.
All right, there you go. Nice career track. Danny, good to see you, man.
Thank
Thanks
you.
so much.
Appreciate it.
By the way, the talk today, is it open to the public? Can people come out there and see you?
Yes, anyone can come. It's at 12:30 today at Seminole State College, Oviedo campus. It'll end at 1:30. I'll have a handout, and I also have a website, facebook.com/studentsfinance. So please visit it. I'll put more tips on there weekly.
Danny, you're off to a great start, doing some good stuff. Thanks, man. Appreciate your time
today.
today.
Appreciate it.
All right, Amy, we'll send it over to you guys.
All right, we're talking about the chill in the air this morning.
He's been on top of finances since age 11.
I'm passionate about it. I'm a big believer in paying your bills on time.
He refinanced his mother's home mortgage at age 14. Now an honors student at Seminole State, he tells me students need to treat their college loans with respect.
Student loans cannot be ignored. They should be handled with honor. Not everybody can get credit, so be proud that you have a student loan under your name.
That's because it could lead to other loans you'll need after college if you want to buy a home or a new car one day. His seminars at 12:30 at the Seminole State campus. After refinancing his mother's home mortgage at age 14, this is easy.
I want to encourage everyone to pay their bills, avoid bankruptcy because bankruptcy seems to be becoming increasingly popular.
In fact, he tells me paying down a college loan's the best thing because it impresses creditors when you go applying for a mortgage or a new car loan.
You don't want to give them the impression that you are a high risk. You want to save money and, buy things that you want.
The financial whiz kid will share some of his knowledge with fellow students at 12:30 today at the Oviedo campus of Seminole State College.
Thank you so much, everyone, for coming. I'm going to talk to you about finance and credit today. Some of you have some misconceptions already about what credit is. You need credit to get anything in this world, such as a cell phone, utility, house, car, and in many states now, a job. Without credit, you can't get anything in this world. Any advice I give you, it's based on my own personal financial experiences. I actually do my mother's finances. I refinanced her house and car. And I've been doing it since I was a child. I've never been late on any kind of bill. So my advice is advice you wouldn't read in any kind of book, and it's guaranteed to help you. Well, why is good financial behavior and credit important? As you know from your parents, without good credit, it makes it difficult to save for your child's education, save for yourselves, and it causes you to have a stress-filled life. It helps you get a better job because 60% of employers now check your credit, your FICO score, and your credit report. The reason for that is because, and this is not meant to be rude, if you have bad credit, it suggests that you're low in character. And so if you're low in character in their eyes, then you're not trustworthy enough to do your job right. So that's the primary reason why having good credit is so important. It also secures your family's financial future. Any bank that gives you credit, such as a loan or service or any company, that's considered a creditor. A credit, you have to pay back the loan money. So credit cards, automobiles, mortgages, personal loans, those are all credit. Many of you have a student loan right now. You have a credit score and credit report right now. A creditor is any financial institution or bank or company. The utility company, or just any company that gives you a service, they're considered a creditor because you have to repay that service. It is very possible anyone can use the water for a month and not pay it, and that will negatively go on their credit report. The purpose of credit is to show that you're financially responsible and that you can pay your bills. And as a business, they need to see that you have a good payment history because they don't want to give you loan money or a service and you just never pay it back. Then they have a business loss. That's why everybody must have credit. You must get a credit card. There's no way to escape that. When people say, I have credit, they're referring to their credit history. When they say, I have good credit, that means they've never been delinquent. When they say, I have bad credit, that means they have been delinquent. When they say, I have no credit, then that means they've never had a loan or service or anything. Your credit history shows your credit worthiness. Credit worthiness is the level of trustworthiness you have in repaying a loan or service. The goal of credit is to show that you have a high level of credit worthiness. Credit cards are needed. They show that you can pay your bills. You can't just get a student loan or just a car loan and never get a credit card. You need to get them. And here is the reason why you need to have good credit, because if you have bad credit, contrary to what some people think, you're going to struggle to find a job.
Ben Tracy brought us a story today that shows that sometimes the unemployed just can't win. It turns out the bad credit rating that often comes with unemployment can keep folks from landing a new job.
Mark Manzo never thought he'd struggle to provide for his 2 daughters.
We weren't rich, but we were comfortable. We had a house, we paid all our bills on time. I had excellent credit.
He and his wife Kristen were making $96,000 a year. But last year, the stalled economy forced Manzo to shut down his car rental business near Los Angeles. Without a paycheck, he can't pay the bills. The bank foreclosed on the family's condominium.
What's it like to be back here now?
It's a little sad.
Their credit is now wrecked.
As a man, I feel like, I feel really bad, honestly. I feel like I can't provide for my kids. I can't seem to find a job.
Manzo says his damaged credit is why he's been rejected 8 times for recent jobs.
They sent me a letter stating that because of information on my credit report, I was not being considered for a position.
And what did you think when you saw that?
My heart sank. I felt like, what am I going to do? What else can I do?
60% of employers say they now run credit checks on some or all of their job candidates. It's legal as long as the job candidate agrees to it, and employers tell them their credit is the reason they're not being hired.
Business owners often say credit histories reflect someone's integrity and reliability. They say bad credit can be a sign of someone prone to corruption.
If you're stocking shelves, if you're cleaning rooms, if you're a cook, any of those positions that really you do not need a credit check.
State Assemblyman Tony Mendoza wrote a new law in California. Beginning in January, use of credit checks in hiring will be banned. The ban will not apply to jobs in law enforcement, management, or jobs involving large amounts of cash.
I don't think that a person's credit score or credit history is indicative of a person's trustworthiness or their work ethic.
California is joining 6 other states restricting the use of credit checks to screen job applicants. Like Mark Manzo, who stopped opening bills he can't pay.
I can't give up. I have 2 little kids. That's not an option for me. I have to keep going.
If Manzo doesn't find a job soon, he may have to file for bankruptcy. Ben Tracy, CBS News, Los Angeles.
Mark Manzo tells us that he's tried a new strategy. In his last interview, he brought up the credit problem and explained it. And that worked. He told us today that he got a job.
So just for the reason that he faced, some of your parents, they can't get jobs because of that reason, because they have bad credit. And it makes it harder for them to pay the bills and save money. And even if you do get a job eventually, you're still going to have high insurance premiums because all insurance companies, such as for term life insurance, car insurance, dental insurance, they all check your credit score and credit report. The reason for that is because it is possible to use the insurance service and not pay the bill. And then the insurance company has a loss. So yes, they all check credit. So when you have good credit, your insurance premiums on all your insurance policies are much cheaper. Bad credit guarantees paying high interest and fees. There are credit cards out there, such as this one, that have interest rates of 80%, 36%, 59%. On top of that, they have annual fees too. So even if you never use the credit card, you still have to pay the annual fee. The annual fees are expensive. They're like $79, $80. I've also seen them on the internet up to $100 and more. So people with bad credit get these credit cards because no one else will grant them a credit card. No traditional bank will grant it to them. Here's an example of someone with bankruptcy or bad credit, what kind of credit card they would get. And I don't want anyone in this room to get such a credit card, which is why I emphasize have good credit, pay your bills all the time.
Using plastic is second nature to most of us, but there are people who can't get credit cards, at least not the kind you normally think of. For example, people with no credit history or a bad credit history, especially people who file bankruptcy. For them, the pickings are slim. So slim, in fact, they might find themselves looking at a deal like this. The Continental Finance MasterCard, issued by First Bank of Delaware. The deal? First, an account setup fee of $99. Then, a program participation fee of $89. An annual fee of $49, and a monthly maintenance fee of
$10. So before you get this card in the mail, it's already got a balance of $247 on it. And what's your credit limit? $300. So when you get your card, you're $53 away from going over the limit. But wait, it gets better. Because if you're responsible and you pay your bills on time, they're going to raise your credit limit $100 at a time and charge you $25 every time they do it. How can a company justify a card like this? First Delaware wouldn't comment. A Continental Finance spokesperson insisted their card was a good choice for people with bad credit. But there are other options, like a secured credit card. You put up a cash deposit, say $300, to get a $300 credit line. Here's one with a rate of less than 9% and no fee. Bottom line, just because you've got bad credit doesn't mean you should jump on the first offer you see. Shop around. And no matter what kind of card you're considering, read the fine print. For Money Talks, I'm Stacy Johnson.
So that emphasized why I said always have good credit. And if you have bad credit, get a secured credit card. Don't get one of those bad credit cards on the internet. They're very expensive and rip-offs. A secured credit card is when you put a security deposit up, such as $300. That's your spending limit, and you still have to repay that money. Let's say you never pay it, they'll ruin your credit, and they'll keep that security deposit money. The personal recommendation, the cheapest secured credit card I've seen out there for people who have bad credit or no credit is the Wells Fargo secured credit card. The annual fee is only $18. I looked on other websites, the annual fees are much more expensive. The interest rates on all secured cards are pretty high, so ultimately don't carry a balance. Some people said to me that you've been told that you need to carry a balance to build credit. That's not true. If you carry a balance, you're hurting your credit because 30% of the FICO scoring model, which is the scoring model banks use to calculate your credit score, carrying a balance lowers your credit scores because it looks like you're spending beyond your means. And so you're more likely to declare a bankruptcy or default and the bank has a loss. So whoever told you that you need to carry a balance, that's not true. After a year of history, ask the bank if they can remove the annual fee and upgrade you from a secured card to an unsecured card, meaning they give you back your security deposit money and now they trust you blindly. And that causes your credit scores to go up too because now it looks like a business can trust you more. To establish good credit, you need to check your credit report on annualcreditreport.com. Someone told me that their parents signed up for a water service using their social security number, and now this person has a collection account on their credit report that they never knew about, a classmate of mine. So for that reason, check your credit report and make sure there's no negative information, because as bad as this is, sometimes negative information is reported to the credit reporting agencies under your name, even if you had no idea you had an account. You need to have a source of income to get any kind of credit. You need to apply for a credit card. I recommend getting a credit card at a credit union because by law, even if you default, they can't increase your interest rate above 18%. If you got a credit card at a traditional bank and you were late by many days, they can take you up to 30%. Don't apply for many credit cards at once because it lowers your credit score. Even if you're getting denied for the credit cards, don't keep applying because that's going to cause your insurance premiums to go up. They'll find out about all those credit checks, and they're going to think that why are you so desperate for loan money? It makes no sense to them why you're doing that. Use your credit card once every 6 months. Don't just never use it. The reason for that is because it costs money for the banks to run their credit card programs, and they pay fees to the credit agencies to check your credit reports. So they want to make a profit off of you. And if they close the account down, it has a negative impact on your credit score. And another thing is that when you have credit cards, don't close them. The only situation in which it's just justified to close the credit card is if there's an expensive annual fee that you can't afford or you have many years of credit history, like 15 years of credit experience. Then it won't do too much damage to close your credit card. If you have way too many credit cards out there, that can lower your credit score too, because the bank thinks that you're going to use all of it and put yourselves into a position that you can't pay anyone. People say that they're late because they lost their job. Really, I don't think many people want to hear this, but you were never supposed to be in that much debt to begin with. When you lose your job, you should have enough money in your bank account to repay the debt. If you don't have enough money, then that means you were spending way beyond your means. Even if you're running a business, you're still not supposed to spend more than the profit or take huge gambles like that. Before becoming late on a credit card, contact a nonprofit credit counseling agency, such as In Charge. Don't contact a random credit counseling agency you found on the internet, and don't pay credit counseling agencies high fees, because always go to nonprofit agencies. And make sure you read a review of the company that you choose to go into business with. Contact your loan issuer of the credit card or whatever loan it is that you can't pay, and ask them if you can defer the payment, but don't make a habit of doing that, or the loan amount will compound with interest and triple in its balance. Don't file for bankruptcy or debt settlement, because it costs money. I think it's like $700 to $800 to file for bankruptcy or a settlement, and you're going to hurt your chances of getting a job, and your insurance premiums are going to increase like crazy. And with bankruptcy and debt settlement, I'm not a bankruptcy attorney, but I do know this vaguely. When you declare a bankruptcy or settlement, the banks to whom you owe money, they clean out your bank accounts. They levy your bank accounts, and there's nothing you can do to stop them. So you'll have $0 in your bank account. You can borrow money from family. You can get a new loan and transfer the balance. When I say transfer the balance, meaning if I have a balance on a Capital One credit card of $900 that has an interest rate of 30%, and I apply for a new Chase credit card that has an interest rate for 12 months for 0%, I can bring over that $900 balance from the Capital One credit card onto the Chase credit card and pay 0%. So that's how that works. You can use any savings or assets to pay for the credit card debt, and keep looking for a job aggressively. A credit score is known as a FICO score, Fair Isaac Corporation. That's the company that designs the credit scoring models. Some businesses use what's called Vantage score, but it's very low. 90% of banks use the FICO score, and for this reason, you should only order a credit score off myfico.com. Don't order a credit score from those other websites on the internet that claim free credit scores and whatnot. Those scores are not authentic because they're trying to replicate FICO. It's not the same thing. They're fake scores, which is, and any website from which you order a credit score that's not myfico.com is called a FICO score because it's not authentic. A credit score doesn't always suggest that you're financially responsible. It is possible to have a delinquency, meaning late payment, from 6 years ago or 5 years ago and have a high credit score of 700 and above. That's not really good because the banks will look at the content of your credit report and they will find that delinquency, and they're going to get on you for that. So don't think just because I have a high FICO score, then that means I have good credit. No, you need to have all paid accounts. It's also possible to have a low credit score for minor reasons and not have bad credit. For example, I've never taken an auto loan, and for that reason, my credit scores are not high. They're in the 690 range. And I've only had a credit card for 1 year. And because of that, one year of experience does not tell them I'm going to repay their bills. They want to see at least 10 years of experience. And again, only order on myfico.com. The credit bureaus, Equifax, Experian, TransUnion, they're private companies. They're not run by the government or anything. They collect your personal financial information, such as what loans you have. Your student loans that all of you have right now are on your credit reports. They don't collect your checking or savings account or IRAs or anything, just loans and payment history. The Federal Trade Commission monitors them. When you apply for a credit card, like if I apply for a Citibank credit card, Citibank will pay a fee to Equifax and will order your credit score and credit report from them. That's how the credit agencies make their money. And for consumers that order their credit reports from those agencies and you pay them a fee, then that's also how they make their money. Are a victim of identity theft, change your social security number immediately. Call all the credit agencies, Equifax, Experian, TransUnion. Freeze your credit report. Also freeze your check systems report, because it is possible someone can open up a checking account under your name and make it negative. That does happen. And then also file a police report immediately. And also inform all your credit card companies that you're a victim of fraud, because if your credit card company notices on your credit report that all these fraudulent credit accounts are getting opened under your name and all this activity is happening with your social security number, they may think that you'll default with them. So inform your credit card companies that you're a victim of fraud and no negative action should be taken against your account. You don't want them closing your credit card. That'll negatively affect your credit scores. If for those of you that have a job, you need to start saving for retirement right now, regardless of your age, 20, 30, 40. If you wait too long, it's going to be harder to save for retirement. You need to open up an IRA, an individual retirement account, at a credit union or community bank. I'm not going to badmouth brokerage firms such as Edward Jones and whatnot, but from my understanding, they usually charge expensive fees. So that's another option, but be aware of the fees. An IRA is an individual retirement account. There's two types of IRAs. There's a Roth IRA and there's a traditional IRA. Roth IRA means you pay taxes on the money and then it goes into the account. It's called after-tax dollars. However, the money that you put into the Roth IRA, you cannot deduct it from your taxes. And the beauty of a Roth IRA is that the money, the interest that you make, the earnings, it grows tax-free. As long as the Roth IRA exists for 5 years, when you turn, I think, 59 and a half, and you reach, that's the age of retirement, and you take the money, you won't have to pay any taxes or 10% tax penalty or anything. A traditional IRA, you can deduct it from your taxes, but when you take the money at retirement, then you have to pay taxes on the interest and pretty much all the money within the IRA. I like Roth IRAs because even before retirement, you can take the money that you deposited, not the interest, and pay no 10% tax penalty, and you can save your house from a foreclosure or your car from repossession. That's why I'm a fan of Roth IRAs. And you don't pay the 10% tax penalty with a Roth IRA if you take it before retirement. However, you can't take the interest. Spread this message because many of you do these things, and please tell all your friends not to do these things. Don't get a payday loan, or on the internet, I'm sure you've seen, come to us, bad credit, no credit, we'll give you a loan, guaranteed approval. Don't go to those places. A payday loan is, let's say if Professor Wright has a bill of $50 that's due on Friday, and she has $0 in her bank account, and she gets paid on Friday. So what Professor Wright could do, she could go to a payday loan provider, she could write them a check for $50, and then they'll give her $50, but they're also going to charge her interest and fees to give her that $50, and then on Friday, she can pay her bill, and then they're going to try and take the money out of her account, but they're also going to try and charge her a bunch of fees. Payday loans have interest rates ranging from 100 to 800%. I'm not even kidding. And you cannot deduct the interest from your taxes. Avoid bad credit card dealerships such as Drive Time. The catch with those is that they sell you a car, but it's very, very expensive, especially for a used car. It's actually more expensive than a new car. And they charge you an interest rate anywhere from 15% to 25% on the auto loan. You're better off just saving for a car. Don't get a car title loan. A car title loan is when you basically give the title of your car, the ownership right, to the car title loan company, and they give you loan money. And if you don't pay back the loan money, they get to keep your car. And it's very dangerous because car title loan companies, they also charge you interest rates ranging from 15 to 36%. Some do charge over 100%. I was looking on the internet. And the goal for them is to make as much profit off of you as possible. The amount of money you pay them will eventually double and triple. So avoid car title loans. Don't get a loan from a pawn shop. Those are very bad too. They have interest rates ranging from 15% all the way to 200%. You'll see them all over the internet. Don't get a cash advance loan, and don't take cash advances from credit cards. Don't get any really high expensive credit cards. A subprime lender is a creditor that gives credit to people with little or no credit, such as Capital One. They're a subprime lender because they have credit cards for people that have no credit history. Not all subprime lenders, but many subprime lenders give you very expensive credit cards, such as ones with 36, 59, 79% interest rates and annual fees. Avoid getting those kinds of credit cards. Get free credit cards from credit unions. Avoid for-profit schools. Many employers think people who get a degree from a for-profit school, you basically purchase the degree like merchandise you would buy at Walmart. They don't think you had a challenging curriculum. They think the school gave you the degree because you gave them so much money. Employers think that. Do not withdraw money from your IRA, individual retirement account, before retirement, or your 401k or 403b. 401k is if you work for a for-profit organization, your employer gives you a special retirement plan. That's called a 401k. It's basically structured with stocks and everything, and you get tax benefits too. At any time you can withdraw the money, but it's dangerous. When you withdraw money from an IRA or 401k or 403b, 403b is for nonprofit organizations. When you withdraw it before retirement, you have to pay ordinary income taxes and a 10% tax penalty, and that's not cheap. Taking a loan against your 401k and 403b, I don't recommend it, but in a situation where you need to save your house from a foreclosure or your car from repossession, take a loan against your 401k, but make sure you pay it back within 5 years. Because if you don't pay it back within 5 years, then you get into trouble, because then you do pay tax penalties, and it becomes what's called a withdrawal. And you also have to pay ordinary income taxes. And here are the interest rates for payday loans. I don't know if anybody can see that, but 391%, 347%, 325%, and you can see how outrageous they are. So don't get payday loans, don't get card title loans, don't get cash advance loans, don't get those loans on the internet that cater to people with bad credit. Don't do it. The people are going to make them very attractive, but they're scams and they're ripoffs. Closing remarks. Again, paying your bills is very important. We're in a credit crisis right now. The student loans crisis is emerging. If the Congress does increase the student loan interest rates, it's very likely many people will default because they won't be able to afford the payments. And then banks will have losses and will very likely fall into a recession. So it's very important to pay your bills. And interest rates for everyone will increase because the banks and the government will try to compensate for the loss. They're going to try and make more profit. Employment will not improve if many people are defaulting. Many of you are probably getting notices from your banks that they're now going to start imposing a fee just for having a checking account or a savings account, such as a $5 monthly fee. I'm sure many of you saw on the news that, for example, Bank of America is now going to charge you a fee just for having the checking account. You have to maintain a certain balance to avoid the fee. The reason why banks are doing that is so you use your credit cards more, and also they're trying to make up for losses they endured from the housing crisis and losses they're still having. They're trying to make up for all those delinquent credit cards. So if people are still defaulting, then it's very likely banks will continue imposing all these different kinds of fees. Again, if you have bad credit, it shows that you have low character. And I'm not trying to be rude with that comment. That's how employers view you. That's how banks view you, because in their mind, you're taking loan money from people, and in a sense, you're stealing from them because you're not paying them back. You don't have to be an expert to have excellent credit. It's very easy. Just pay your bills. No matter what interest rate, no hardship, whatever hardship you have, always pay your bills. Always work with your bank. Always inform them if you're in some sort of struggle. They'll work with you. They're trained for these situations. Don't just let the account become delinquent and let them keep calling and ruining your credit. You don't want the level of delinquency growing on the accounts. 30-day delinquency becoming 60-day, it all lowers your credit score.